Hi everyone. We will learn definition of finance. What is the finance?
Finance, of financing, is the process of raising funds or capital for any kind of expenditure. It is the process of channeling various funds in the form of credit, loans, or invested capital to those economic entities that most need them or can put them to the most productive use. Consumers, business firms, and governments often do not have the funds available to make expenditures, pay their debts, or complete other transactions and must borrow or sell equity to obtain the money they need to conduct their operations.
What are the areas of finance?
There are three broad areas in finance that have developed specialized institutions, procedures, standards, and goals: business finance, personal finance, and public finance.
In developed nations, an elaborate structure of financial markets and institutions exists to serve the needs of these areas jointly and separately. Business finance. Business finance is a form of applied economics that uses the quantitative data provided by accounting, the tools of statistics, and economic theory in an effort to optimize the goals of a corporation or other business entity. The basic financial decisions involved include an estimate of future asset requirements and the optimum combination of funds needed to obtain those assets. Business financing makes use of short-term credit in the form of trade credit, bank loans, and commercial paper.
Long-term funds are obtained by the sale of securities, stocks and bonds, to a variety of financial institutions and individuals through the operations of national and international capital markets. Personal finance deals primarily with family budgets, the investment of personal savings, and the use of consumer credit. Individuals typically obtain mortgages from commercial banks and savings and loan associations to purchase their homes, while financing for the purchase of consumer durable goods, automobiles, appliances, can be obtained from banks and finance companies. Charge accounts and credit cards are other important means by which banks and businesses extend short-term credit to consumers. If individuals need to consolidate their debts or borrow cash in an emergency, small cash loans can be obtained at banks, credit unions, or finance companies.
Public finance.
The level and importance of public or government finance has increased sharply in Western countries since the Great Depression of the 1930s. As a result, taxation, public expenditures, and the nature of the public debt now typically exert a much greater effect on a nation's economy than previously. Governments finance their expenditures through a number of different methods, by far the most important of which is taxes.
Government budgets seldom balance, however, and in order to finance their deficits, governments must borrow, which in turn creates public debt.
Most public debt consists of marketable securities issued by a government, which must make specified payments at designated times to the holders of its securities.
What is a financial intermediary?
The institutions that channel funds from savers to users are called financial intermediaries. They include commercial banks, savings and loan associations, and such non-bank institutions as credit unions, insurance companies, pension funds, investment companies, and finance companies.
Savers and investors, on the other hand, accumulate funds which could earn interest or dividends if put to productive use.
These savings may accumulate in the form of savings deposits, savings and loan shares, or pension and insurance claims. When loaned out at interest or invested in equity shares, they provide a source of investment funds. Finance is the process of channeling these funds in the form of credit, loans, or invested capital to those economic entities that most need them or can put them to the most productive use. The institutions that channel funds from savers to users are called financial intermediaries. They include commercial banks, savings and loan associations, and such non-bank institutions as credit unions, insurance companies, pension funds, investment companies, and finance companies.